Okay, guys, welcome to tonight's session, and I hope I hope you guys have been doing very well, and I also hope that you've been learning one or two or a whole deal from the sessions from the classes so far. If not, then I don't know what else to do to encourage you. But for those of you who have been paying attention, you're welcome, and it will pay you, it will benefit you a lot. Okay. Whenever there is something called word of affirmations. Word of affirmations are sentences that you say or that someone says to build up confidence for something. So you see someone will say, I am wealthy, I am prosperous, I am great. The person is saying this word of affirmations. But you see, the issue there is that most people don't understand what the they don't have the in-depth meaning of what they say. Whenever you say I am wealthy, it's very easy to say. I mean, it's very simple to say. Anybody can say that. But if you break that statement as simple as it is down, it is you practically saying that I am willing and ready to do everything in my power that will make me to become a wealthy person. So whenever you say those words of affirmation, they are not just words that just automatically create the things that you wish into your experience. No, they are just words that remind you of the goal, of your dream, of your desires, and that behind those remembrance, behind those reminder, there are works that needs to be done. So you're not going to have your dream house handed over to you on a platter of gold. After all, we've all agreed that life is not bed of roses. The same thing in this market. This market is not something that you just come and you think you just draw one or two lines and you think everything will just start falling in place. No, that's you you're practically in a market of trillions. This daily transaction in this market is up to 9 trillion, and you think all you need to make money in this market is just cheap knowledge. No, that's not it. You need the real knowledge that drives results in this market. It is beyond what you know. The market don't care what you know. What the market cares about is that what you know should work. It's like a laptop. If you keep on pressing random buttons on a laptop that is switched off, it will never turn on until you press the power button. The instruction, the only instruction that the laptop understands for it to switch on is the power on button. So that's until you press that power on button, you keep on typing different things and you keep on blaming the laptop. And that's the dangerous thing. When you don't know what to press on that laptop so that it can come up, you will blame the laptop. Oh, it's the laptop issue. It's not the gigabyte is small. So you keep on complaining. The same thing for this market. If you don't know that which you are supposed to know, for you to be able to generate certain results, you keep on complaining and blaming and hoping that one day it works. This market does not work based on hope. As far as this market is concerned, you keep on losing and losing and losing and losing until you do that which works. That is why sometimes when you enter a trade, you see that it goes your way. Then you enter another trade, it does not go your way. So you will notice that there is something, the same thing you did in the previous trade that went your way is the same thing you are doing in this same trade that now gave you loss. So you begin to question yourself, what's the problem? Some of you have even given up. You need to understand how this market works so that you stop becoming a victim of losses. If you want to be a day trader, there is a body of knowledge you need to have. Apt body of knowledge. If you want to be swinging, if you want to be a swing trader, there are knowledge that you need to have as a swing trader. You don't just jam pack things together and expect them to work. No. And do you know the funny thing about this market that I have known? You see, when you start out as a trader, and you begin to see all these things in front of your screen, you begin to see them unfold before your very eyes, and all of a sudden, or you decide to just test it out. Funny thing is that you will be right. You would be right. And what the market is practically telling you during those moments is that, see, there is possibility for you to be right. So every time that you are wrong, maybe you bought and then the market sold, it's not because of the fault of the market. I was speaking with someone recently and he was saying something about the fact that, the market does not like this or the market like that or whatever. And I was telling him that the market is neutral. It's neutral. It's neutral. The market is there on its own. What you have with you are the informations it has given to you. Your job is to use this information to make money. Finish. The market don't care how you do that. But you see, it's like a door. It's like a door. If you use the wrong key to a door, it will not open. So is it the fault of the door that the door is not opened? No. So the market is just there. The market is neutral. It is like the door. Check the key you are using. Is it the right key? Is it the proper key? Is that the key you're supposed to be using? Then if you've and you cannot keep on doing the same thing over and over again and you expect a different result. It's not gonna work. It's not gonna work. If it doesn't work, it doesn't work. As an MBM trader, we are people who want what works. We follow what works. We follow the body of knowledge that gives us our desired result. It is beyond just the candles, the patterns for us. It is the understanding of these things. So when you see price clear a previous candle level, it does not just mean that you are selling. You see, this is what I'm trying to say. For you to know what this next candle will be, there is a body of knowledge that you need to acquire. Now, when this candle, you see this particular candle here, when it cleared this high, when it cleared this previous candle high, you don't just sell immediately. Now, what you have is that price has cleared previous candle high. Information has been given to you. You don't just jump into that information like that. Now you have to decode that information. And how do you decode that information? Through understanding why did it break that high, what it did before breaking that high, the way it broke that high, everything together. Does it have potential to continue going higher despite breaking that high? When you are able to decode this information, then you can now decide if it is intelligent to start selling, or you continue that move. Because if we look at this clearing here, you see this previous candle high, see how this candle cleared it. Just a few pip, and then it sold. But if you look at this candle, if you look at this one here, this particular one, you see how it cleared it massively and even closed above it, above the previous candle high. So it is more than price just clearing previous candle high, and then you just think because Charles Mark said whenever a candle clears previous candle high. No, that's not what I'm saying. All I'm saying is for a wick to be created, you expect a previous candle high to be cleared. That's when you can expect your wick high, and if it's a wick low, you previous candle low cleared, then you expect your wick low. I have not spoken about how you ascertain if it is ripe enough to start selling in the case of a previous high cleared, or ripe enough to start buying in the case of a previous low cleared. And there is a body of knowledge that you need to have for you to be able to engage the market like that. We don't do things haphazardly as MBM traders. We are calm, we are collected. You relax. We have no business with what happened. I mean, we have no business with, drawing lines and everything. No, our focus is on present price action. How is price relating to previous price action? So as MBM traders, it's very important that you pay attention when you are in class, because this knowledge, I'm giving them to you, I'm teaching you, I'm showing them to you, but it will not benefit you if you do not pay attention. This is why some of you will start this class together, and at the end of the day, others will be doing well while others will not do well. Not because of what I've taught is wrong, or because of what I've taught works for some people or some other people. No, it's just because you did not pay attention. While others were jotting down, they were writing, they were noting things down, you were cramming everything on your head. You were thinking you can know everything. You are in $1 trillion market. There are people who use more sophisticated tools than what you use. So it's very important that you as a trader, you have the whole knowledge. Don't cheat yourself. Don't cheat yourself. Okay? So that's it for it. In our previous class, I was able to talk about, structures, price clearing, previous candle high, and expecting that it's gonna give us our, price clearing previous candle level, and using that as basis to ascertain weak low and weak high. How candles are the structures that we follow, not the market lower high, lower low stuff that you guys were taught. Yeah. So if we're gonna follow a lower high and lower low, we follow the market. For example, if we want to now, the normal market structure will tell you this is the normal market structure knowledge will tell you this is a high here, and it will tell you this is a lower low, lower high, lower low, lower high, a lower low, a lower high. They are following a lower low, a lower high, lower low, a lower high. They are following the pattern formation of the market. But MBM traders, we don't do that, because that way of representing market structure is flawed. The way we represent market structure is by the information the market gives to us, and that is candle. So in this move here, we have a low, we have a high, and then this is our another low, this is another high, this is another low, this is another high, this is another low. So that's how we reference our lower, our structure as MBM traders. When we get to structure, explaining structure in depth, I'll definitely talk about it more. But for now, for tonight's session, I want to teach you guys about entry model. Okay, entry model. Now, the market business, the reason why I would have shifted the entry model to another class, but I feel like I should give it out to you guys now so that I will know that we are done with that part. Okay, and we're going to move to now in the market business model. There are two types of entry models. I'll be teaching us one now because that is, we can easily understand it now. And then the second one, if I decide to teach you now, you might not understand it. So I'm going to shift it to when we are talking about swing. Okay? Because we'll talk about swings, okay, in MBM because there are a lot of things that needs to be discussed. And so let's proceed. Now, in the market business model, based on what I've taught you so far, we reference previous price action. Now, you see, here is a trick and here is a tip. When you are trading the market business model, you have no business with far away price action. Your focus is on immediate or close price action. This is what I'm trying to say. This is the currently today is Wednesday, so this candle is currently being created. And since today is Wednesday, yesterday was Tuesday. Yeah, good. This is the candle for Tuesday. This is for Monday. Now, if we are to trade, because I'm on the daily time frame, now this works on every candle or every time frame, okay? So now, if I want to trade this particular candle, the first body of information I will reference is previous candle levels. I hope you see that. Previous candle levels. And what's that? Previous candle high and previous candle low. So what I'm anticipating is that price clears previous candle high, and then I look for sell, or I expect the wick to be created and hope that it starts selling, or price clears previous candle low, and I expect a wick for buy move. Okay. Now, immediately after these previous candle levels, do we have any other level? So if we measure, we would see that the next level after this level, after this, this previous candle, after this previous candle is this high. So it makes sense if we reference this high, if we reference this high as price delivery. In other words, we are saying that if price clears this high and it does not reverse, we can expect it to go and clear this high next. And then after this high, where is the next high? This region, and we proceed like that. The same thing for the low. When price clears this low, where is the next low? It is this low. So we can anticipate that price would, after clearing this low, if it's not ready to reverse, it would clear this low, after that low, to clear this low, after that low, this low. Now, notice how we pay attention to only highs and lows. And our expectation is that price reverse at this point. I hope you get what I'm saying. Now, this is not support and resistance points. And I'm going to show you why. It is none of those things. Now, so that's the tips, okay? So that's it. We pay attention to the immediate price action. We have no business with what has happened, if it's not next for we follow the liquidity is the availability of an opposite side. So if price is to go up, it means that there is seller's liquidity, abi? Good. And for price to go to, let's imagine this is $1. Price currently at $1. For it to go to $5, you must pass to $2, $3, $4, $5, etc. You get that, right? Exactly. So this is the low. This is the if sellers, it's more like negotiation between sellers and buyers. Remember, that's what I'm trying to tell you. That's why I told you. Negotiating. So once price is above the opening price, it means negotiation is started. The opening price is point of negotiation. Anything above it is expensive. Anything below it is cheap, right? So as this candle open here, we could expect that it will come to clear this previous candle high and start selling off. Or if the sellers are not willing to sell or the buyers don't find it cheap enough, they clear that high. Now the question is, how do we know if they are not willing to start selling from here? We'll talk about it. But for now, we are focusing on understanding previous candle and using it to reference price. Because if you don't understand it, you won't even understand the next, how to even know if price is not cheap at this point. I hope you get. So it's very important that you understand these things. Now, I'm on the daily time frame. Okay, so I have built an expectation for price. Either price clears this high or clears this low. Now, because of this candle is yet to form, I will use another candle as reference for what I want to teach you guys. For this same thing I'm about to explain for our entry model. Now, when a candle clears a high, a previous candle high, there is expectation that it's going to start selling. But it's not just going to start selling. You don't just say, oh, because it has cleared the previous candle high, you just place a sell. You're going to take a loss. Why? Because look at this region here now. You see how price cleared this high. Price cleared that previous candle high, created the wick, which is true, but it closed above the previous candle high, which means that you definitely have to be in loss. You'll be floating in loss if you just entered like that. But there is a way you can know that, okay, price is ready to start reversing, so that when you see that reversal, the money transfer, when you see it here, yeah, then you can start anticipating a sell. Now, at every week high, I told us that at every week high, a week high is telling us that buyers were in control. Yeah, buyers created liquidity, and then sellers took charge. And for every week low, sellers created the liquidity, and then buyers filled it up. Now, in that scenario, it means that every time we have a week high, every time we are expecting a week high, we are expecting to be on the side of the askers, the sellers. And every time we are expecting a weak low, yeah, we are expecting to be on the side of the bidders, buyers. That means we are buying. Now, how do we know when they are in charge? Now, this is what I'm going to. Now, let's get down to business. And this is the part where we call the MBM money transfer. Remember, we are dealing with business here. Money transfer. You see, or you can call it trade transfer. Okay. The point is that we are trying to focus on the transference of power, momentum, money, flow, whatever it is, assets, volume from in a weak high, we are expecting that a transfer from the bidders to the askers. And for a weak low, we're expecting a transfer from the askers to the bidders. Now, how do we, because if we look at it, let me draw a candle for you guys. Let's say this is a candle here. There's a candle here. There's a candle here. Okay. So at this week high, what happened here? If we zoom out, what happened at this week high? What we will see is that this is what we'll see. Buyers came in, and then sellers finished the move. And the opposite is what happened for a week low. You get what I'm saying? The opposite is what happened for a week low. In a week low, you see, sellers called the price, buyers paid their orders. That's what happened in a week low. Okay. Now, let's focus on a week high. Whenever buyers start buying at a week high, they will be creating, sorry guys, I have to delete this. It's not palatable. Yeah. Let me see. Now, wherever buyers are in charge, they will most likely create moves like this. Do you understand? It could be a long week, it could be a short week, it doesn't matter. The point is, if we go to lower time frame based on what is happening on this week level here, this is what's happening. Now, how do we know that they are ready to transfer? I mean, the sellers are ready to come into this market. The first thing we will pay attention to is a down move. I don't know how I'm going to explain this that it will not sound funny to you guys. But you see, when price starts selling and it's giving us that, selling vibe, of course, it means that sellers are in charge. But our focus is, how can we get in at this first entry? How do we know this first entry? And this is where we have to understand the market business model entry. The market business model entry. I call it the market business, the MBM money transfer entry, because basically that's what is happening there. There's a transfer of money from the bidders to the askers. So whenever we are anticipating the bidders to come into control, we are expecting something like a bearish candle, and this bearish candle is signifying intention. Then a bullish candle. Now you see this bullish candle, we anticipate that the next candle clears it, close below it. Now, the next candle must do two things. It must clear this bullish candle. Now, let me color this candle. Let me just color it green so that you will not be confused here. So, a bearish candle, a bullish candle, and then a bearish candle. Intention, transfer, confirmation. This is the intention. This is where the transfer starts from. This is the confirmation. And then this is the delivery. So you see, here is telling us that, okay, there is exhaustion. There is exhaustion. Here it is telling us that bidders are trying to, buyers are trying to, they're still trying to try their luck up. But then you see this last candle, it needs to do two things. Now, it doesn't necessarily have to clear this bullish candle high, but if it does clear it, then it gives meaning to it. It makes sense. But in most cases, just wait for it to clear. But sometimes it doesn't need to clear. It's still the same thing. But I prefer it clearing, especially when your entry is on a very, very low time frame. Okay, so bearish candle, bullish candle signifying bullish intention, and then the last bearish candle closing below both candles. It must close below both candles. So I don't care if there is a wick here. If this, bullish candle has a wick or whatever it has, I don't care. The point is that this next candle must close below it. And that's your entry. That's where we anticipate our entry. And this is how we identify money transfer on this week. I'm going to explain again. Whenever you see price is above the opening price, it means bidders are in control. Now, at a point, bidders will get exhausted. And how do we know that they are exhausted? Through the transfer, money transfer or volume transfer to the askers. Now, how can we tell that the askers are in control? We are not focusing on the transfer. We are focusing on the volume, on who is in charge. We don't care when they transfer. If you try to assume when the transfer is going to happen, you're going to lose a lot before you get it right. It's more like you are trying to catch the top. It's not possible. And whenever we catch the top, of course, it's possible. But the point is that why hurt yourself? Just relax. So we don't focus on the transfer. We focus on who is in charge. First, we wait for the bullish guys to be exhausted. And how do we know that they're exhausted? This candle, this whole thing here. This whole thing here is what tells us about exhaustion and about transfer. The first bearish candle tells us that, okay, the bears they're having their eyes at that point. The second bullish candle tells us that the bulls might continue. Now, do you know the funny thing? Price might now continue going up. That's why it's important that you wait for candle close. Price might continue to go up, which means that sellers are not willing, buyers are not willing to let go. It's very important that this candle close, this next candle, because at the end of the day, this can be a bullish candle, and you would think that, oh, this is a bearish, a bullish, and then you just enter. And by the time you enter, what happened? This becomes a continuation. So it's important that these three candles, they all close. They are closed. They must be closed. Once they are closed, then you can relax. Then you know you're on the right path. The first candle signifies that askers are in move. They are already filling into the liquidity of the bidders. Second move is telling us that the bidders, now this is where bidders get trapped. Those people who are not informed, the bidders who are not informed and they think, okay, they're going to keep on buying. Fortunately, this here is signifying that the bidders' last move for continuation. And the last candle, what happened? closed below that level. Once you close below that level, you can start anticipating a reversal. Now, you see this last candle here is your most important candle. It must do two things. The first thing is clear the previous candle high, which is not necessary. This one here is not necessary in some scenarios when price is well exhausted. You might not even have time to clear this candle high here. Your focus is that it clears this low. If it does not clear this low, then you have nothing. Sometimes it's going to weak this level. It will weak this level and go back up. It doesn't matter. It has cleared the low. The point is that this low gets cleared, signifying intention. And this is what we call the MBM money transfer model. Money is being transferred from a volume transfer. Let's call it you can call it the volume transfer, the money transfer. Either way, when I annotate it on my chart, I call it MVM. The M for MBM, the V for volume, and MVT rather. Okay, so the T for transfer. You can call it the market business model volume transfer. You can call it the business volume transfer. The point is there is a volume transfer there. There is money transferred. Okay, so our focus is on the transfer. Now, this is how we look for entries. Now, if you just assume that because of this is what we use to enter a trade, then it will always be right, then you're wrong. Because sometimes price would need to clear some certain levels before it gives you this, this transfer for you to enter. Now, you see this bullish candle, yeah? This bullish candle here, the reason why because in the market business model, it doesn't matter what the color is. But the reason why I had to call it a bullish candle for you guys is because of the stage where you are now. By the time we proceed in our teaching, I will teach us that it is not, sometimes it's not going to be, you would see, I will teach you that, you notice that it doesn't have to be bullish candle. It doesn't have to be bullish candle. But I have to teach us this right now because like I said, this is the one that you guys can easily understand. Because for those of you who I've noticed that some of you are already practicing what I've been taught and you don't understand the entry models yet. And this is the reason why I'm showing you this. Now, there is a rule. Rule number 1. You must have a directional bias on a higher time frame. When I say directional bias now, I'm talking about price clearing previous day high, meaning that we are expecting a sell, or price above the opening, meaning that we are expecting a sell. And then this entry here must be on a lower time frame. Now you can enter it on 15 minutes, on 5 minutes, on 1 minute, it doesn't matter. The point is find a time frame that you're comfortable with. Because this thing happens on all time frame. It is the opposite when we are looking for a sell, when price clears a previous candle and we are hoping for, a sell exhaustion, or we are anticipating. So when you see sellers, when you see price below the open, and you know that it is about to start going up, what you're looking for is a bullish move. what's it called now? Money transfer from askers to bidders. Here, it is from bidders to askers. From here, it is from askers to bidders. They say the volume gets transferred. Okay. Now, what would happen here is that after the askers, after the bidders, after the sellers, the askers started, they created the liquidity above price for, you know, for, the bidders buy into it. And for bidders to buy into it, they must confirm that they are willing to buy into that move by giving us money transfer. So you see, price, sorry, this have to be bullish, bullish, sorry, to be bullish, bearish. Is it now? Yeah. Oh, from here, that's the bullish move there. Then this have to be bearish. Sorry, just bearish and bullish continuation. So this here will be, let me color this one as red. So a bullish move signifying that price is, willing to go up. Okay, bidders are coming into the market, and then a sell candle and opposite candle signifying that there is exhaustion, and the last candle goes in the main direction, identifying continuation, and we buy into that. Okay, so it's nothing difficult there. It's very easy to know. It's very easy to know. When we proceed in our knowledge, we'll talk more about this. I will trash it down for us better. But for now, this is it. Now, we annotate whenever we anticipate a volume transfer from bidders to, I'm sorry, from askers to bidders, we annotate that as sorry, we annotate that as V. Oh, sorry, let me just make that bold for you guys to see. We annotate that as top, as middle, yeah, V T, as VT, VTB. Okay, and then we annotate this whenever we're anticipating volume transfer from, the bidders to the askers. We call it VTA. And then from the bidders to the, from the askers to the bidders, call it VTB. Okay, so you want to see your VTB around, below the candle open, and you want to see your VTA above candle open. And this is your VTB here. This is your VTA here. Now let's go to the chart and see how these things play out. Now, I'll be using the 5 minutes as my as my time frame where I'll be picking my VTA or my VTB. And my VTB, yeah? Good. So, and then I'll be using the daily time frame as my directional frame. So, for example, you see this candle here has cleared previous candle high. So, what am I expecting? A sell, right? So, if I'm going to my lower time, if I'm going to my lower time frame, if I'm going to lower time frame, I'm going to let my entry time frame, yeah. What am I expecting? I'm expecting VTA. So let's go to 5 minutes and see if it happened that way. So I'm just gonna 5 minutes. You can see it. Oh, sorry, 5 minutes. See it, yeah? And I'll enter. Now let me see. Now this is it. I marked it. See previous day candle high. I'm sorry, previous day high that I marked. And yeah. Now look at this. Now this is the reason why I said I was going to teach you guys. Now my entry is definitely around this region. Okay. But remember, as I was speaking the other time, I said the candle color does not matter. It doesn't matter, which I'm going to teach you guys. But for now, for your safety and for the sake of your of your mental health as someone who is just learning MBM, okay, when you get to that level, you will understand it. But for now, just look for the color of the candles as I've taught you that signify a volume transfer and enter. So here it didn't show. Now, if you go to lower time frame, let's say on the 3 minutes, so for those of you who would be using the 3 minutes as your entry time frame, you can see that. So price clear previous candle high here. Where is it? Yeah, previous candle high. Price cleared it. And the moment it cleared it, it started selling. And then what happened? It gave us a bullish candle. So this bullish candle here. See, bullish candle. And the next candle, remember what I said, cleared it, and it must close below this candle. And you see that now this immediate candle did not close below it, but this candle closed below it. This one did. This one did. So the moment, I'm sorry, it cleared it rather. It doesn't matter if it closed below it. The point is that it cleared it, okay? Although when it closed below it, it makes sense. But the point is there is intention. So we have buyers, buying. Now, look at this. Look at this, guys. Let me show you. Okay, let's annotate so that it looks interesting for you guys. Now, the first thing is that this is PDA, previous day. I'm sorry, PDH, which is previous day high. If you are using candle, you call it PCH, previous candle high, okay? So this is PDH. Now, this is the daily open. This is where the day opened, okay? Unfortunately, look at what happened there. And this is why I love MBM, because it's very simple, it's direct. It doesn't stress you. It doesn't ask you to go and be looking for what is not lost. You see how price opened and then it started selling. Now, based on what I taught you in the market business model, it means that price is what? Price is cheap enough to buy. And what happened? It started going up, which means the market business model was right. But where exactly would price get to before we can say it is cheap enough to start buying? For what I've taught you so far, it must be a previous candle. Now, if based on the candlestick you use, at this point, based on the time frame the candle you use, at this point, price is cheap enough for you to buy, you will definitely be part of this move. But according to what I teach you guys, if you follow it that way, you're going to make losses. So based on what I'm teaching you guys, I said, always reference which time frame? The daily time frame. Not just the hourly. When we get to when you are mature, when we get to the hourly, I've not even broken down the hourly very well. I've been focusing majorly on the daily time frame, and I have my reasons to focus on it. So below the opening, it is cheap, and then it bought, which means that now that it is above the opening price for this day, it is expensive and could start selling, and that's why you see pullback. You see this thing called pullback here. Now, you see this sell here, this move from this high to this low is, we can call it the money transfer also, because you see from this whole move here is actually, when we get to swing, explaining swing, you understand properly that it's actually the high of a particular candle. But that does not interest us because that's not our focus. Remember, I told you now that this one does not interest us. This one too does not interest us. Why? Because it's not our focus. Now ask yourself, but Max, why is it not our focus? This is because this is the market and it is not our business. What are you trading? You are trading the market business model. You are here to come and look for your business. The market is, let me use example. Your marketplace now in your locality, your local environment. I mean, in your town or wherever you're staying, the market. When you go to the market, you see different people. Some were there before you got to the market. Some you got to the market at the same time. Some other people will come to the market after you've gone to the market. Immediately you enter the market, that's when some people, that's the time they will arrive at the market. Some, it is until you leave the market before they come to the market. The point is, everybody comes to the market at different time. The market opens at a particular time, but everybody comes to the market at what? At different time. The same thing for those who sell stuff in the market, they open at different time. That is why the time frame for Forex opening is different from the time when futures open. It's different from the time when index opens in the financial market. It's different from the time that the cryptocurrencies open, because these are the products that you want to come and buy. And then we, the traders, we have different time that is convenient for us to deal. We have different time that is convenient for us to trade. Based on how I am teaching you, I am telling you to reference the daily time frame. When you advance in your knowledge, some of you will pick 8 hours. Some of you will pick 4 hours. Some of you will pick 1 hour. Some of you will pick 15 minutes. Some of you will pick monthly. And the choice of time frame is what now dictates the type of trader that you are. If you will be a day trader, a scalper, a swing, or a position trader. Please pay attention. Because some of you just call yourself day trader because you trade in a day. No, that's not it. or because of that's what they call you. No. Oh, guys, knowledge, very important. So the reason why this point here is not our business is because to frame our directional bias, we need what? We use the daily time frame. And before price got to this high here, we have anticipated that that's what it's going to do. Anticipation is different from expectation. Expectation is what you want it to do. Anticipation is what you hope or what we are looking forward that for it to do. So we are anticipating it. It might not clear that high. Funny thing is that it might go to this level and it will just start selling, selling, selling. And the funny thing is that, you see, those who sold here, it doesn't mean that they didn't make enough, they didn't make profit. Yes. Yes. As far as I'm concerned, in the market business model, we get entry that gives us pips as low as 5 pips, sometimes it's 0.5 pips. Personally, I get entry as low as 0.5 pips. Yeah, personally, I do. Now, our advice that as you are beginning, you don't really go down into lower time frame. I think 5 minutes is okay for you guys. 5-minute time frame. Start from there. In fact, start from 15 minutes. And then as once you have mastered it, then you can now switch to 5 minutes. That's how I did my thing. And that's how I became very good today, that I can go to any time frame and I can look for my VTA or VTB and I make my money. When we go into live trading, you see these things yourself. I'm not just boasting here. So our focus is what? The daily level. So once price clears PDH, previous day high, yeah, what are we now expecting? What was it called now? VTA, volume transfer to the askers. And how do we recognize that? See the sell move, and then a bullish move, and then you see this one that clears that, a bullish candle. You see the sell candles, yeah? The point is there were sell candles. Then we have bullish candle. The price cleared that bullish candle, and what happened? Start selling. Now our entry will definitely now be below this level here. Stop loss will be at that high, and wherever price wants to go. And the funny thing is that price delivered. I think it delivered up to this level here. And if we look at how many RR that gives us, that gives us 1:15. And if we count how many pips that is about 4.7 pips. And we are done for the day. Just one single move like this, and if you trade very well, you might not need to trade for the whole of the month. One single move like this, and you have passed your prop firm challenges. Okay, I have to go back to the 5 minutes because that's the time frame I asked you guys to be trading on and to look for your entry on. So we'll go back to the daily time frame. Now we have traded this whole day. So we'll go back to the daily time frame. Let me use another day as example. Let me look for a buy scenario. Let me look for another day. Of course, I'll still teach you. We are learning a lot. Okay, so what if it does not clear the previous day levels? Yeah, some of you will ask those questions. I'll answer them. So just follow up. There is no question you want to ask. All you need to do is just be patient for the next class. I will definitely answer all your questions. Now, another question is, how do we know when to take profit? I'll also talk about it. Now, you see this particular day here, you see it's clear previous day high and gave us VTA, volume transfer to askers, and sold immediately. But look at this one. This particular day cleared previous day high and it didn't reverse. But then, so Daily time frame, we have marked our previous day high here. So what we need to do is, this is Friday high. This is Monday. Okay, so previous day high cleared. Now, another thing is that previous day high does not necessarily have to be cleared. But I think when we proceed, I'll teach you about those ones too. But for now, let's take it one after the other. Okay. This is knowledge. We are learning. We're not in a hurry. Remember, this mentorship is we're not rushing. Let's take it. It's when you are calm, that's when you will build yourself. Have you not seen plants that when you water the plant, you don't just pour the water on the plant. If you pour the water once, the plant will not grow. But when you water it, then a little bit, it has enough sunshine, and then you come back, little by little, you are doing things small, 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 so you are not in a hurry. By the time that plant starts giving you harvest, it will give you chunky, bountiful ones. Bountiful harvest. That's the same thing for this MBM. You don't rush it. After all, it's a new concept. Why are you running to? Relax. Body is chasing you. And I'm not telling you that I'm gonna stop teaching. So relax and learn. Please, okay? Good. Because when you relax and learn, that's when you will not have problem in front of the screen. Okay? Good. A previous day high, Monday cleared, Friday high. So I'm gonna go to my entry time frame, which is 5 minutes here. And I'm gonna see if I can get good. Now see, previous day high cleared. That is you see it's cleared here. Now you see that when it cleared that previous day high, what happened? It continued going up. It continued going up. It continued. Now look at what happened here. Let me draw your attention to something. For some of you, somebody needs to tell you the bad side. If not, you just be doing rubbish. Please don't do rubbish. I'm begging you. Now, price went up and then gave us a sell move and then a bullish move. Good. Now, it gave us the sell, then this bullish move. Now, what we were anticipating is that price will clear this low, right? So that we can sell, right? Good. But look at what happened. This particular candle here cleared this high, giving us what this is just telling you now is that the bulls are still in control. Why? Because it's cleared this is where we reference. This is the candle that we use as reference, and that reference candle is cleared. What happened? This is the next reference candle, and what we are expecting is the same thing: bearish move candle, bullish candle. A bearish move, it could be double candle, it could be triple candle. The point is bearish intention, and then a bullish candle, and then the next thing we anticipate is a bearish candle that will come and clear this low. The conditions were met here, but this last candle invalidated that move. And then we now have to start from this candle, sell a bullish move, and unfortunately, a sell did not happen. Now, imagine if you did not wait for candles to close, and then you see this sell move, and then this bullish move, and then you now go and sell. You just sold immediately. You're gonna take loss, bro. You're gonna take loss, bro. So much loss. You see that? Until price got to this point, intention for sellers came into control. The bidders created the liquid. Now the askers are coming into the move, and then the VTA, yeah? So volume transfer. Now bullish candle. All we need is just this bullish candle to be cleared. That's it there. Sorry, not now. You see this bullish candle here. the bullish move started from this low. So you see this bullish candle, whatever is below it, as I said before, okay? So in some scenario, in most scenario, the bullish candle will be the low. But in this scenario, it is not the bullish candle that was the low. So the lowest point was here. Okay. So your entry is at that point. When price clear that level and close below it, you look for your entry. That's our short there. Even though that's our short there. Okay. Now, there are still questions around, sir, how do we know when price is going to reverse? All those ones, you will learn everything, so just relax. The point is, understand these things first and make sure they work. So you see price. Now, this one is a little bit complicated, but it's still the same. You remember, in MBM, we don't trade patterns. We trade what? Logic, understanding, knowledge. If you were to follow pattern, you wouldn't have traded what I've you will see that this one here and this one here, they are two different things. I hope you get. But it is still the same idea, the same context, the same reason for price delivery. So remember what I told you, both of them sold, but the reason why they sold are two different things. So we don't trade patterns as MBM traders. By the time I teach you where the part where we don't pay attention to the logic, to candles, you can even have entries as low as from this portion here. Don't worry. And that's why majority of the time when you trade as MBM traders, most of your trades are usually snipe entries, as you guys would call it. Based on what I told you, I did not explain a pattern to you. I explained a logic to you. First, intention. Second, exhaustion. Exhaustion is when bullish moves come into the market and they couldn't go higher than the intention move. And then the third one is delivery, clearing that low. So intention is when there is bearish moves. Okay, exhaustion is bullish move that couldn't clear that intention move, intention candles or candles. And then delivery is price clearing the low of the exhaustion candle. Once that's done, the exhaustion move, not exhaustion candle, exhaustion move. Once that's done, I start anticipating sell moves. Now let's look for buy moves. Go to our daily time frame once more. I know some of you are not patient. You'll be looking for moves on lower time frame. Well, that's when we get to that portion, you will talk about it. Now you see this previous day, it got cleared. So previous day low cleared. PDH and PDL. So for previous day low, we call it PDL. Okay, so what are we looking for? In the case of a PDL, what are we looking for? We're looking for VTB, volume transfer to bidders. Okay, so we go to lower time frame. This is Friday. Okay, so we'll go to our entry time frame, which is where? On Friday, on 5 minutes. And what are we looking for? We're looking for VTBs. So this is Thursday low, cleared on Friday. So we're looking for what? VTB. And We never had any VTB. We never had. Now look at this. Price cleared that level and it continued selling. Now, MBM is magical. It's magical. Below the daily open, meaning it's cheap already, but it did not. That's not what we are looking for. Of course, I will teach you guys how to catch all these moves, all this, for those of you who like to scalp. But that's not what I'm teaching you. The stage we are is not there. This is where MBM is beautiful, guys. See that move there? It was just selling, selling, selling until intention move. See that intention move? See that? And then the candle, which is the bearish candle, yeah, which is exhaustion. And then price closing above exhaustion move, and that's price delivery. Now remember, I told you that it doesn't have to clear the exhaustion candle low or high. Okay, so that's a long position there. And now, sorry guys, I'm trying to say something. And that's the move. Now let me now look at that. Now you see this move here. I don't know, but I think this is a news move. See how everything aligned in your favor as a trader. It's aligned in your favor as a trader. There's no need for you to be scared of news. Why? Because you're on the right side of the market. And this is 1:7. Let's look for another previous day low cleared. See how I'm doing it here? That's how you should be doing it. That's how you should practice too. I'm not doing this because of, I'm doing it for you guys, okay? I'm a pro trader. I'm not, there was a time where I'm way past this level, and all of you are going to be way past that level. But it's like a baby. A baby, a baby don't just run. Imagine your baby start running all of a sudden. Won't you be scared? Be scared. In fact, you say, what kind of abominable child is this? But a baby starts from crawling. From crawling. So you are crawling, and crawling is doing this as I'm showing it to you. Price clears what? Cleared previous day low. This is on the daily time frame. Yeah, price cleared previous day low. So we'll just go to the 5 minutes to look for my entry. So what am I looking for? I'm looking for VTB. It's volume transfer to the bidders. So this is previous candle low here. See that cleared. Now let's see, do we have a VTB? Now, well, there were some, stuff until, okay. So what we have here is, price continuing the move, and then, was just doing some funny stuff here. Now, in cases where you have price clustering together like this, make sure that you do not hurry. That's why I said we are not after if the bidders are, we are not after if the bidders are exhausted, or if they found it expensive, no, or cheap enough. No, our focus is on the transfer. We need to confirm that transfer. And how do we confirm that transfer? First, we need impulsive bullish move. So we need bullish moves, and that's what happened here. And then a bearish move. See this candle here? Bearish move. Now, this is a bullish move and a bearish move. But you see how that bearish move cleared this bullish move. So we can reference this point. Okay. But look at this move here. Bullish move and a bearish candle here. You see that? Now what we need now is the move. You see this from the high to, you see this high here. All we need is for it to be cleared. And what happened? Price cleared and closed above it. From that moment, look for a long position. Once price is closed above it, look for a long position. In some scenario, of course, there is a way we refine this, but this is me just teaching you the traditional entry model method. Okay, so just, and then your stop loss have to be here then, and you what's it called now? Anticipate price doing this. There are ways we refine it. Don't worry, I'll teach you everything. This stage that you are in is called the stage of being patient. You have to be patient. But let's see how far did the market go. See how far did the market delivered in our favor. Wow, price was still going, still move. Wow, wow, wow. That move is smart. That move was much. Okay. Just want to show us how far MBM delivered in our favor. Now, I think this Wednesday, you see this move. See this move here? Is that not a news move? As a news move. I think this was Wednesday, 15th of January. What news was that? I think that CPI, if I'm correct. Yeah, that's CPI. So this is CPI move. And since you know that, you see, well, since you know direction, just keep on, you know, keep on that move and keep on doing your thing. You get, I think, you see that. I just want, so for those of you who like to swing, that's the reason why I keep on. I don't want to close at ram down point. So at this high, I'm just gonna stop there. Just gonna stop there. Okay, so hold on, guys, please. Okay, so I'm just gonna let me show that to you. So how many RR is that? Let's just check how many RR that was. How many RR that is, and that's 1:52. That's on a swing move. Okay, so and so that's MBM for you, and that's how you see how we are able to catch this move at this low point here, just by price clearing previous day level, moving in our direction. So that's it, guys. I'm just gonna have to end it here today. It's been a wonderful session with you guys. Our sessions from now on is going to be a little bit lengthy. Reason is because now I will have to be showing you things, giving you examples like how we did today. Before I would just teach and you go home to study those classes. But now I will teach you and then practice them based on, because the knowledge now have to be in practical format. It is beyond just illustrating. Now we have to experiment and practice. You get so. That will be all for tonight, guys. I wish you all the best. And until we meet again in our next class, do have a wonderful night rest. Bye bye.